Hey everybody, it is Simba the Speaker, your guide to cleaning business success. Welcome back to my channel and welcome back to another video. As you guys know, I drop videos every Tuesday and Thursday at 6 p.m. Hey, if you are new to the channel, please give me a subscribe. Hit that subscriber button. Subscribe to the videos. You can hit the bell notification if you would like to get a notification every time I drop some videos. As well, I would love a thumbs up at the end of the video if you feel like I offered value or if you felt like I put in effort to give you some value, right? So one thing I always say is that I'm a chatty patty when I come out here. If you've seen some of my last previous videos, they were like 30 and 40 minutes. And I'm trying to get better at kind of give you guys a solid amount of just valuable information in general, while not, force you to have to like look at a video for like 50 minutes, right? So, I've been calling myself a chatty patty, but I gotta change that because I don't like the patty. But nonetheless, welcome back to another video. For time's sake, we are going to get straight into it. So today's video, as you can see, today's video is how to effectively pay yourself in your business. How to effectively pay yourself in your business. So you're running a remote cleaning business model, right? You're running a remote cleaning business, or maybe you're doing HVAC, maybe you're doing plumbing, right? How do you effectively, and I love that word, right? How do we effectively pay ourselves, right? Not just pay ourselves whatever, but systematically pay ourselves. So one of the books I've been referencing lately, and I've referenced this in some of my previous YouTube videos, is Profit First. Is a great book, right? And this book necessarily is pretty much, and I'll explain it, but before I explain it, I want to say it pretty much touches on financial organization within your business. It touches on financial organization within your business, and I'm going to talk about why, right? So the formula that it talked about in Profit First. So the formula is meant for an entrepreneur to be able to pay themselves, right? It's meant for an entrepreneur to be able to pay themselves. And because a lot of times, sometimes we pay all the expenses and everything first, and then whatever's left over, we keep, right? But how, as entrepreneurs, are we supposed to survive, successfully run a business if we ourselves are not being taken care of? So pretty much what the equation is sales minus profit, or sales minus owner's pay equals expenses. Sales minus owner's pay / profit equal expenses. So what you do is you take the owner's pay, you take the profit out, and whatever is left, that's what you operate your business with. And then pretty much what he goes deeper and talk about it is, if your expenses exceed the budget that is less for it after you've organized, after you've given it its percentage, you need to find a way to cut costs and cut expenses so that it falls in line with the budget you have set for it based off the equation, right? So I know I just said a lot. I'm trying to break it down, but I'll give you an example. I'll put it here, right? So let's say the income is $10,000, right? Let's say 10K. So let's say that you are giving yourself 20% owner's pay. Let's say you're gonna do 50% operating costs, owner's pay, right? So that leaves us 30%. Let's say we do 20% taxes. Let me look at the account. Income, profit, owner, taxes, operating expense. So we have the owner's pay, the operating costs, the taxes. Now we're missing profit, and then this is income. Okay. So I'm going to explain all of this because I feel like I was saying a lot, but I wasn't. Let me actually explain it. I want to note it. But then we're going to still get into the video. I don't think, okay, we're not too bad. 5 minutes in. Okay, so right here we have 50% 70, 90. Let's say we do 10% for profit, right? So now what we're going to break this $10,000 down, right? And the 10K would be the income account. This is where all the money goes to. So let's say we're breaking this down, right? 20% owner's pay, that would be $2,000. 50% operating cost, that would be $5,000. We said 20% for taxes, $2,000, right? And then we said 10% for profit, which would be $1,000. So that right here, this right here makes up that full 10K. This right here makes up that full $10,000. Now, what I was saying before, and I was trying to kind of give you it, put it in a way that we would all understand. If operating cost is $5,000, right? Let's say we got $5,000 operated to $5,000 allocated to operating costs, and let's say operating costs were $6,000, right? Or let's say we're looking at the prediction, right? It's gonna be maybe up to $6,000, right? Operating costs could be labor, software. It could be let's say labor, marketing. Actually, let's say I'm gonna call this operating costs. / software, labor, so forth and so on. So right, let's say we have like $5,000 allocated for that, right? Now we realize that our operating costs or expenses exceed $5,000, then we need to figure out where can we cut costs in order to still be able to make these percentages work. So that is the basis of what he was talking about. But now I'm actually gonna go into how to effectively pay yourself. I wanted to give you guys some background. I know it took a little bit, but no worries. Okay. See, and that's what I'm like. Thank God I pre-plan my videos, have some notes, helps out a lot. So look, to effectively pay yourself first, when you're starting your remote cleaning business or remote home service business, I always say that what you're gonna want to do is make separate accounts. Open up separate accounts, right? And we just seen a little bit of what I was talking about. You're gonna see the different accounts, right? So you should have separate accounts in which your money will come into, and then from there you'll split the money, right? And you'll see how all of this pays in, how all of this goes in to paying yourself. So first we have the we're gonna say separate account. And then we have income, profit. These are all the accounts you're going to separate them to. Owner's pay, tax and operating expenses. So just a quick breakdown. The income is where all of the 100% of the money will come into. That's all the revenue that you made for the month. It will get deposited into your income account. From there, you will break off the money into these separate accounts, right? So you're gonna have the profit. Profit, you'll need to read the book, but pretty much profit ends up becoming a distribution for yourself in the long run. But go definitely check out the book. I'm not gonna talk about that too much in here, right? Owner's pay is your salary. How much are you getting paid, right? How much are you getting paid? What is the owner's pay? You're gonna have a percentage for that. You need to account for that. Taxes are going to come whether you like it or not. Put the money away. Just don't argue about it. Put the money away. Make it easy for yourself. You do not want to owe the IRS. So you want the tax account and operating expenses. Well, we're operating the actual business from. That could be software, labor, marketing. However, whatever you use to operate your business, right? That's the money, that's the account it comes from. That's the account it comes from. So you have the operating expenses, right? So now that we have these accounts, we need to see what percentages would we like to allocate these to, right? So everybody has their different distribution percentages, right? You've seen the one I just recently broke down, the 50-20-20-10. You may want to do something different, right? You may want to do 55-5-20-20, right? So you have to understand your business and kind of look at the data, right? Look at the data. On average, how much expenses do you run through every time per month, right? How much expenses do you run through per month? How much money do you bring in? And I tell you now, these separate accounts helped so much. This definitely was one of the barriers that I was missing when it became in the mission to become a successful entrepreneur and officially run my business. I'm getting tongue tied today. Okay, so we have the different accounts, right? So we need to establish our percentages. Establish percentages. Like I said, this is up to your discretion on how you want to do this, right? So just to kind of go back into what we just did, remember? So I did income. Obviously, income is going to be 100%. That's what the money comes to. Profit, we did 10%. Owner's pay, we did 20%. Tax, 20%. And operating, operating E, we did 50%. 50%. So you have to figure out what percentages you would like to, incorporate into your business. Now, this is a very important step. You have to create a schedule for your transfer of funds. So when you're transferring funds, you need to have a prepped up date, a date that you're choosing to do that, right? So, or you just a routine in a sense, right? In terms of, do you want to do it monthly or bi-weekly, right? So transfer the funds. But the reason I said that is because you have to stick with this consistently, right? So that means you can't touch your owner's pay till it gets transferred on a 2-week or a monthly basis. And that will help you keep the business organized. The reason I say that, a lot of times people are just taking money in and out of their business, in and out for personal use and this and that. And I understand that you need money to take care of things. But when it comes to an organizational perspective, it's not good. So transfer the funds on regular schedule. Let me see something. So I'm going to go to the next page. Transfer funds regularly. Okay, right? We want to transfer the funds regularly. I spelled that wrong. Right? So we want to make sure we transfer the funds. I said that so wrong too. Y'all forgive me. It's been a long day. We want to transfer the fund regularly, right? So what you could choose is a monthly or bi-weekly schedule. Right? You want to do that on a monthly or bi-weekly schedule. And it will be the same thing, right? You will just work with the revenue that you have. You break down the percentages. So let's say you're on track to do 20,000, maybe do 10,000 for the first 2 weeks. If you want to pay yourself out, then calculate the numbers based off that revenue for that 2 weeks, and then go from there. Let's say something happens and then the month slows down, and then you only do 6,000 or 7,000, right? Or maybe some people reschedule or cancel, and it messes up, I guess, the projection of you doing 10,000. You're still going to do the same thing. You're going to break down the number based off the revenue that you're working with. Okay, right? So we transfer the funds regularly. You want to get on a monthly or bi-weekly schedule to get that going. And from there, that's how you would pretty much pay yourself, right? You'll just transfer the funds. So another thing, actually, right? I want to add to that, right? Because there are different ways to do it. So I know AWP has a payment service, and the other one that I know of is Gusto payment service. So they will help you with the taxes, deducting the taxes out your pay, setting up the schedule, setting up that pay schedule, and then getting it, transfer from the account over to your own personal account. So once again, we want to go back into this. Like I said, how to effectively pay ourselves, we want to first make sure we have all the proper accounts open. We want to make sure we have the income, the profit, the owner's pay, the tax, the operating expenses, right? So once we have all those accounts organized and open, we want to make sure that we are assigning a percentage to each account, and we're staying with it. If it's gonna be 50, 20, 20, 10, let it be 50, 20, 20, 10, right? Let's stick with it and be consistent with it. And then from there, once the money comes in, we want to transfer the funds regularly, right? We want to transfer, maybe we want to get paid every bi-weekly, or maybe you work at 9 to 5, you don't mind just getting a check at the end of the month, right? And so from there, you then schedule it for the month. But this is why I was saying data is so important. We need to make sure we're having our data and our finances organized. So we're getting the correct number. We're getting the correct number. Like I said, that was something I struggled with early in my business, right? I was, because I didn't have the right accounts, I was taking money left and right, putting money in different places. It was not organized. So I had to change that, right? So right there, just three ways to effectively pay yourself in your business. Profit First is the book. Great book. Go get the book. You can get the book on Amazon. I don't think it costs too much. Profit First is a great book. It will give you a deep inside perspective on how to effectively do this, and even beyond, like, what you can do, right? Because, for example, with the profit account, you can allocate that to be a distribution to yourself at the end of the year, right? Every 12 months. And what you can say is, out of whatever's in the profit account, we are going to distribute 10-20% as like just a distribution bonus, or a distribution for the end of the year. It gets deeper than what we explained it, but surface level, this is how you would pay yourself. But yeah, I know I just said a lot. Once again, I think this is one of those videos that, like I said, I'm just passionate about this stuff. Like I said, Profit First really helped me out a lot. If you like the video, if you can give me a thumbs up, like the video, if you felt the effort and the passion I was trying to put in while giving you this information, give me a thumbs up. Subscribe if you're new to the channel. Once again, I drop every Tuesday and Thursday at 6 p.m. Once again, thank you for being here, and I will see you in the next video.